could bring ourselves over to these turnover ratios, or I call them efficiency ratios. I don't believe this is an official term, but it'll help you understand what we are doing here. We've got accounts receivable turnover ratio, days sales and accounts receivable, and a few notes on all these formulas. If these sound more familiar, well, this is in line with our cash conversion cycle, right? How many days are you managing your accounts receivable? How many days generally are your payables outstanding? So remember, you want your receivables to go down, you want to collect them sooner, and you want your payables to go up. You want to not have to pay your bills for as long as possible. Now, a good general rule is that for these turnover ratios, it's either sales or cost of goods sold in the numerator, as you see right here, sales, cost of goods sold, sales, cost of goods sold, and whatever account it's referring to is in the denominator, such as average accounts receivable, average payable. Now, why do I call them efficiency ratios? Well, this ratio right here, accounts receivable turnover, it essentially dictates how efficient you are at turning your sales into accounts receivable. And accounts receivable is what the money that's owed to you, right? I mean, yes, you could kind of say sales and cash, but generally companies go through receivables and then they receive their cash. So sales to accounts receivable, right? You want to convert, you want to be more efficient at converting sales to receivable and actually collect those, right? You want to record those. So that's important, right? Also, accounts payable, you want to see how efficient you are at managing your cost of goods sold relative to your accounts payable, your average accounts payable. We've got another one, inventory turnover, for example. You want to turn your inventory over pretty quickly. I mean, the point of inventory is to sell it as quick as possible to make cash. And to earn cash, you don't just make cash, you earn cash. And right, that's your operational reason for existing, is to generate that cash flow. So that is a good efficiency metric. I would definitely memorize all these formulas, keep them on your mind, and you'll do well with them. Let's do an example using our turnover ratios. We've got our accounts payable turnover, accounts receivable, we'll see in a second, and days payables outstanding. Just super plug and chug formulas. We read the question first. It says, what is ABC's accounts payable turnover and days of payables outstanding for year two? Okay, well, we take a look and we write down the formulas that are mentioned in the question, as you will have memorized if you don't already. Here are our formulas written out, and you just simply plug and chug from what's stated in the question. Well, COGS, cost of goods sold, here's 400, plug it in. Then average payable, it's a simple average. We just do the beginning of the year of 30, end of year of 50, divide those by 2, right? That gets us 400 divided by 40, giving us an AP turnover of 10. Pretty straightforward, right? Nice, nice there. Now, days payable outstanding, again, plug and chug. We've got the ending accounts payable, cost of goods sold, divided by 365. Just plug them in and get your final answer, which is 45.62. You got it, you got it, you're doing well. I really don't want to go into these much more than other than saying, right, just plug and chug. I want you to just earn these free points on the exam. Definitely understand them, understand what you're doing, what the purpose of this is, right? You're managing efficiency, how quickly can you turn those over, and how long are your payables outstanding? Well, we want to get this number down. So that would be nice, wouldn't it? Because we want to reduce our accounts payable. We don't want to have payables outstanding. Well, I guess we want them outstanding, but I mean, less payables is better, right? Less liabilities is better. There's just a whole different way, many ways to look at all of these. As I have here, again, just stated for your reference, we've got accounts receivable turnover and days sales and accounts receivable. We'll see these questions right away, so make sure you have these memorized. I'll do an example of them right here. And here's our example. Again, pretty straightforward plug and chug. We take our sales right here. Well, net sales, what does that mean? That could be sales net of discounts, returns, and allowances. We don't have anything complex like that, but it could be. And accounts receivable, net receivables, what would this be net of? Well, if receivables had, right, allowance for doubtful accounts, that would be net of those. So we would do AR minus allowance for doubtful. 500 divided by Same number, I use the same numbers for the AR as I did for the AP. We get our simple average of 40, so 500 divided by 40 gives us 12.5. Again, accounts receivable turnover is the number of times per year typically that a company is converting its receivables to cash. The days in accounts receivable, how many days on average it takes for a company to convert its credit sales into cash.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.